Hello and welcome to our web-based presentation on tax-exempt municipal bonds. My name is Sabir Graywal. I'm co-founder and principal of Washington Square Capital Management, and today we'll be talking about the tax-free muni bond market. We'll cover an overview of what muni bonds are, what sets them apart from other investments, and we'll also talk about what's been happening in this space over the past few weeks and months. A little bit about us. We're a New York-based independent investment advisory firm. We offer three core services: investment management, financial planning and wealth management, and pension or benefits consulting. Before we start today's presentation, I just have to say that everything we speak about today is purely for educational purposes, and it should not be considered as investment advice. There is a disclaimer towards the end of this presentation, and I hope all of you will take a careful look at it. There are generally three different types of municipal bonds that the market distinguishes amongst. The first and probably the most common are general obligation bonds, also called full faith and credit bonds. These are issued by a state, a city, a local government, and they basically they're backed by the entire credit of the issuing entity without any exceptions. The next type of bond would be a moral obligation, or what's sometimes called an informal pledge. So the municipality or the state informally pledges to repay the principal and interest, but it's not a general or a full faith obligation. The last type of bonds are revenue bonds. These often back private activity. What sets them apart is that typically there's a specific revenue stream. It could be sales taxes, it could be parking fees, or any other type of revenue is set aside to cover the interest and principal payments on these bonds. What you'll notice on this page is a chart that looks at bond issuance in different areas of the US bond market, and muni bonds are the section at the very bottom. And what you'll notice is that muni bond issuance has stayed relatively constant over time, while issuance in treasuries and agencies of corporate bonds has gone up and down with economic cycles. And this is one of the reasons the municipal bond market has so often been considered the sleepy backwater of American finance. Now, there are a number of special characteristics that apply pretty much only to municipal bonds, and generally only to municipal bonds within the US or American context. Probably the most important is that interest on many municipals is tax exempt at the federal level. State tax benefits differ depending on the state we're talking about, but in most cases the attraction for many investors to municipal bonds is that the interest is not subject to federal income tax. That does allow states and municipalities to finance debt at lower rates than they would otherwise be able to finance. Another special characteristic of munis is that when they are issued by states, states are quasi-sovereign under the U.S. legal system just because of the way the federal structure of U.S. government is organized. You'll also notice, once you've been in the muni market for a while, that there's state oversight and support of smaller issuers. So for instance, there have been budget issues in Nassau County in New York over the past couple of months, and an oversight board from the state has taken over the budget process and will be controlling, in a sense, that process going forward. Munis are very diverse, very complicated in a very real way. You're dealing with 50 different jurisdictions, 51 sometimes if you include Puerto Rico as well. And muni investors who've been in the marketplace for a while know that there are very diverse issuers. There's different terms, different disclosure conventions for munis. We also know that multiple statutes, multiple laws on the books can impact a single bond. And the interaction between the bond indenture, any other pledges that the issuing authority may have made, and political and legal changes that might occur is relatively important. There's been a lot of talk recently about bankruptcy or municipal bankruptcy. It's important to keep in mind that the federal bankruptcy law applies only in some cases within the municipal world. There are certain states that do not permit municipalities and cities to actually apply for protection under the federal bankruptcy court, and there is really no portion of the code that applies to states. So that's part of the reason you hear the view expressed that states can't apply for bankruptcy protection, and that's strictly true. It's not clear that under the U.S. Constitution states could petition a federal court for bankruptcy protection. The last special point about munis that I want to touch upon is that they're very, very thinly traded, and that's going to become pretty clear when we look at the next slide. Now here on this slide we're going to take a look at the muni bond market at a high level, and you'll see that in the third quarter of 2010 the total number of municipal bonds outstanding was just short of $3 trillion. So that's about $2,870 billion worth of principal amount issued in municipal bonds and still outstanding to be paid. The last line on this slide is interesting. The trading activity in the muni market, so the notional value of bonds that were traded on any given day, is only $12.5 billion. That works out to less than 0.5% of all the bonds outstanding. This is a very low number, and it's not unusual to find bonds that have not been traded for months, sometimes years. There's usually a lot of trading that goes on at the very beginning when a bond is issued, and then trading activity drops off because most investors in the muni bond market are buy and hold investors, and you'll see that from the pie chart. About a third of municipal bonds are held by individuals directly. So these are individuals who bought bonds usually when they're first issued and just plan to hold them, collecting interest and waiting for principal to be repaid, and then plan to reinvest that usually in the municipal bond market again. A slightly smaller amount is held by mutual funds. They're often also held by individuals, so indirectly, and then the rest is at insurance companies, some banks, and brokers. One of the things we've discussed in passing earlier is the sheer diversity of the muni bond market. And I just want to point out that there are over 60,000 different issuers of municipal bonds in the U.S. So that's states, school districts, localities, cities, could be sewer systems in cities, could be a particular project, whether it's a power project or a parking garage or a convention center. So you really have to keep this in mind when thinking about the muni market, is that it's very, very diverse. There are many different issuers. They all have different objectives. They're in different kinds of financial health as well. And their bonds often trade or are valued in different ways.